is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. Me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And we're off 20 points on the S&P cash. And I love it when a plan comes together. And it has, at least for the daily newsletter. I think it will for the weekly newsletter coming next week. You can always check that out if you're into longer-term trading. Go to the newsletter and investment newsletters and look under the Tech Insider, which I publish each Friday. Just got done. Actually very excited because there's some new developments and something that I've wanted that existed that kind of went away. And this week it came back with a vengeance. And it even has a confluence with a Swedish chef from Sesame Street. Very weird things going on out there, but a lot of neat stuff happening. Of course, we meet here every day at this time.
The following takes place between 2 p.m. and 3 p.m.
It does. Volume is very good, by the way. As we head down to test the lows, so far that would be the 2052 low of earlier this morning. And, you know, they've tried a couple of times to rally this thing. Very hard to rally a market going into a Friday unless you've got some kind of news when you're already in a downtrend. 2.75 billion shares already as we start the show. So certainly more juice than we've had to the upside. The question is just how much juice is there? I will be getting numbers after the close tonight or over the weekend from Trim Tabs that will tell me just how much fund flows are coming in. We had about $60 billion leave last week. And my guess is that selling will not diminish. We'll probably have that or more, especially after we look at what happened to Apple. But 2055 on the S&P cash as we get started. Got a lot of stocks moving out here, so that will continue on. And it's just time to get this party started.
Then it's all just a little bit of history repeating.
On this day in 1863, one of the big magnates, what could you say? The robber barons, I'm going to call him in that league. He certainly palled around with them all. William Randolph Hearst is one of the founders of the American media industry. He's born to John Hearst, a wealthy miner and rancher. He marries a school teacher. In 1887, just out of Harvard, he takes over as the editor of a fledgling newspaper called the San Francisco Examiner, which his father had recently acquired in a gambling debt. By the turn of the century, William Randolph Hearst is world's most powerful press barons and the model for Orson Welles' Citizen Kane. He was, of course, born this day in 1963, died in August 14th of 1951, but not after Orson Welles skewered him. He was kind of a good idealistic man. What would you call it? A biblical tale? A Shakespearean tale of beginning off as a person that truly is enamored with doing the right thing, only to become the most evil person probably in America, short of a handful of other folks. But of course, in 1941, Orson Welles came out with his Citizen Kane. I can't believe that people still haven't seen it. From film critics, always thought of as the best movie ever made. He came up with about probably about 40 new things in movies When you go and learn about movies or take the movie course for USC in LA, they will talk about this movie for almost a month to go through exactly all the things that make this probably one of the few, if only, perfect movies ever made. And of course, the end of the movie, spoiler alert, is Rosebud. That is what, of course, the aforementioned man used to call the rear end of his girlfriend. And a kind of subtle dig. Of course, the newspapers wouldn't even publish that, of course, the movie had been made. And maybe one of the reasons why the critics also say that it was one of the best movies ever made. But Orson Welles, probably one of these guys, cursed early on by having such enormous success and probably painting his Rembrandt and when he was young. I think he was only 35, 32 when this was out. He was very young. But on this day, the birth of the conglomerate news organizations. Now, of course, a lot of people would like to paint the Fox people in this. I think there's enough blame to go around. Just look at ESPN and what they did today. You can find evil in just about anything after it's been around long enough. It tends to fester and putrefy anything. Anyway, just a thought. Icon, of course, last night, if you didn't catch my show at 4 o'clock, wanted to just talk just a little bit more about this because we've been talking about how things go on. There are some themes out there. In fact, I put it in my newsletter this morning. There was a great quote last week from, and now I'm having a mental blank here. I'm going to have to look it up myself. Hang on a second. I will get it. Where is it? Come on. There it is, the 29th. Okay, Jeffrey Gunlich. Now I remember. He said he made a name for himself primarily because in March 2005, he was convinced there would be a complete collapse of the credit market. When there was still a hypothetical and years before it blew up, people argued with him, said this would never happen. And of course, if you're going to be short, most of the time you're going to be fairly early. As I said many times on this show, you're either going to be 3 minutes, 3 hours, 3 days, 3 weeks, or 3 years early. I think he was about probably 2.5 years early. But that would be it. But he goes along with kind of what I've always thought, and that is about 80% of the time, you can't tell what's going on. About 20% of the time you can. Luckily, there's all kinds of things like commodities and all sectors of equities. So you can always find something to trade if you keep your eyes open. But many times, things just aren't predictable, let me put it that way. Carl Icahn, my prediction, though, for the last 2 years has been that you send money to China if you want to send it to money heaven. Carl Icahn, we'll talk more about this when we come back. You can give me a call at 877-927-6648. Email me at path@tfnn.com. We got lots of charts and stuff to look at yet today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we made just a new low on the S&P cash. Went down there and tagged it for a second, popped back up. We'll see whether or not that sticks or not. My guess is that we continue to sell and have pressure all the way in to the close today, but at 20.53 on the S&P cash, off 22 points. Anyway, we're talking about Carl Icahn, and I've had, in kind of tongue-in-cheek, been playing the I Like Chinese song from one of the Monty Pythons.
I like Chinese. I like Chinese.
Oh, I like them.
I
I like their tiny little trees. Anyway, I like them, but there is no real fair trade between the countries. And if they see anything actually selling well, they quickly set up their own industry to go after it in their own country. But I think Icahn has finally figured out, and probably talked to more than a few people, that China is getting more and more on the protectionist side of this. I've said it for the last 2 years, but he said, you worry a bit, and maybe more than a little about Chinese attitude, Icahn said. He said that the Chinese government would make it very difficult for Apple to sell there. And of course, we've seen a multitude of companies that have either gone there and left, i.e. Google, because of restrictions. Of course, Mark Zuckerberg is telling everybody that he will have everybody sign up on Facebook. I just don't think that there is any money to be had in China. And it takes me back to what George Soros said, and that is that all of economic history is one lie and deceit after another. Your job as a speculator is to get on when the lie is being perpetrated and get off before the lie has been discovered. I think the lie that there is any money for any U.S. company to be had in China is at least transitory. We've seen Qualcomm absolutely eviscerated and made to give up its crown jewels i.e. it's intellectual property to get in there. Everybody wants to get in there. Yes, they've got a lot of people. And no, China is not going to do that probably until maybe someone forces many of their super tank or super container ships to turn around and head back there. And we'll probably have to have a little bit of a trade war. I suspect it is coming. But I think right now the world is run by many people, and most of those people right now that are telling everybody what to do are diplomats, and diplomats hardly ever get anything actually taken care of. It actually has to go sometimes to a shooting war before anything happens. If it doesn't, then you get countries like, I don't know, Iran, North Korea, with nuclear missiles that can kill millions at a single blow. We need an adult, especially in trade relations. That's pretty much my commentary on that for today. We'll get into others. Got lots of questions in the den, and we're going to get to them. And some emails out here. It says, what do I think about NVIDIA's long-term with VR and cars in the future and using their other graphics? I think it becomes incredibly problematic because Intel is doing such a great job of putting everything together. They've done a lot better. I thought that back at 20 that they were toast. Probably the only thing that's really done well for them is that they have gotten into the graphic chip business. But that chip business is going to be that and the processor too, and it becomes incredibly, I'm just going to say eventually. I don't know exactly when it's going to be, but my guess is that either they get bought out or they go out of business, and that's probably 2.5 or 3 years down the line. But they've got about 2 years before Intel and every other company in the world, AMD and everybody else that makes graphics chips, but also makes processors, just incorporates everything they do in the main processor. Selling an independent graphics processor is kind of a 2000 story. Now that we're getting into the 2020s, it is very hard to rest on one deal. Now, they do have kind of a processor that they have their own graphics chips in, but it's very low dollar. And my guess is that Intel, maybe some others out there, are going to easily wipe them out in the near future. Probably even Chinese manufacturers who now got the crown jewels from AMD and all of their work for that. And I imagine we're going to see stiff competition, at least on the low end, from those Chinese manufacturers now that AMD has given up its intellectual property to get some business out of China. China's very good at that. They're waiting. Unfortunately, I think that's going to be the rough part for NVIDIA. Basically, Intel has the graphics processor part down. They've now bought, of course, Altera and have the programmable logic part done. And, I just don't know how these one-hit wonders, i.e. graphics chips, actually make it in the long term. They're kind of a one-legged stool. I just don't know when that part is going to crack. They've done well. I dislike the energy up from this 3104 level from March 10th up to this high. And today they've broken a trend line that really goes back to the 16th of March. Not good at all. So I would say that would be problematic. That was NVIDIA. When the driverless cars coming on the market, I say that it's going to be tough to get driverless cars on the market when if you actually talk about using them all over the country. What happens when there's a blinding rain and you're using lasers to actually figure out where you're at on the road? Do all the cars just stop and wait for the rain to continue on? You'll notice that they're testing these cars out in the desert. They're testing them in California, where because of the song, it never rains in Southern California. It does, of course. But here in Florida, where we get torrential rains, or maybe in Texas, maybe in the Midwest where it rains all the time, what happens to lasers when they go through that rain? And that's going to be an ongoing problem. What happens when it snows? How good is the software on ice? Does it just instantly lock up and run you into a bridge abutment and kill you? Everything is wonderful until you get it out into the real world. We know that the cars have first had problems because they didn't drive like humans, so everybody kept running into the back of the Google cars. They had to actually program them to break the law, that is, move up around corners, do other things. I think we're a lot farther away. There are going to be some places where you can use them, where the conditions are always known, where the weather is always perfect, where there isn't ice on the road, where the question of whether or not someone can see some black ice across or let me put it this way, a computer can see black ice across a bridge in the Midwest in the midst of winter at night. I don't think so. I think you're going to see those, what they call in programming, edge cases, be the bugaboo of driverless cars. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Got a little bit of bounce off those lows. We're at 2056. I suspect that's going to be short-lived. We only have an hour and a half left. I'd I don't know how many people want to throw themselves on the grenade going into a weekend. Always easier to wait. Volume's still good. We're getting ready to cross through about 3 billion shares. I know, though, it's almost Pavlovian for many to try to buy every low. I just suspect that we may not have much more to the downside today. Fun buying, of course, coming in Monday, Tuesday, Wednesday next week. But again, I have a feeling it's going to be like fun buying was last time, and that is maybe flat for the majority of stocks. 2056.90 on the S&P cash right now, and as we crest 3 billion shares on the New York Consolidated tape. Well, we got a lot of stuff moving out here. Let's get to a few of these as quickly as we can. A little bit more continuation from Abbott Laboratories. Not near the volume, but certainly looks like this is going to go down to $36.02 level from February 11th. We've talked a great deal about these double repo patterns, and that is 10 to 15 days above a 9-day or 3-day 3x3 displaced moving average. Normally what you get is one kind of close underneath it, and then you have pop back above. But I have a feeling we were above this line so long that was it. We're going to go to Reddy in Mountain Vernon. How you doing today?
I'm doing good, sir. How are you guys?
I'm fantastic. If I was any better, I'd be twins.
First-time caller. Really like your show. Great job. And
well, thanks to the Tiger family.
You're welcome. Thank you. I have a question on Expedia. I really like to, wait for the earnings. Once the earnings come out, I tend to, play those $2-3 fluctuations, 2-3-4 percentages. So today on Expedia, I went and took a short early in the morning. I expected a little downturn, but I think now it's going in the right direction. What I want. I have puts. I have puts right near the money. I think I have 115.
Yeah. When do they expire?
50 days. I do have it 50 days.
50 days. Well, they normally would be what, the 20th of May? When do yours expire?
June 16th. I'm sorry.
Okay.
June.
That's fine. I just wanted to make sure. To me, all this bounce, including Facebook and stuff, they couldn't hold the highs. I'm looking for a pullback to somewhere around 1920 over probably that time frame that you've got those in. It's just that this one, the big problem with this stock for me being short it is that so many people were short it. Normally, it's every dollar it comes down, now you've got other people covering their shorts, and that really kind of slows down how many people or how fast it can go down. It's the big shorts that pay off are really the shorts where all the shorts have given up, and you have light volume. I dislike that you had high volume today. That would suggest that you're going to test you're probably going to test 117 again. You wanted this thing to get up here with light volume and then pull back down. That it has heavy volume suggests one more retest. So could it come down to maybe 108 or something and then come back up to 117 again and then fail? It's probably more likely over time.
Okay.
So, to me, it wouldn't be my trade. It's not a bad trade. You've got fun buying Monday and Tuesday. That their earnings were not as bad as everybody thought. I'm looking for probably a little bit of the money that's come out of Apple and the rest of these stocks today to go into some of these stocks that have done well over the last few days, thinking that it will be a safe place to park the money. Those stocks will probably go a little higher. Then the whole market will kind of roll over and everything will go lower. So, normally if I was going to sell options like your puts, you normally on Friday want to be out of them generally by about 1 o'clock, because they're going to suck the premium. They're going to suck the premium out for the weekend anyway. So you almost have a free roll for these till Monday's open. You're really not going to get that much more deterioration in that option until then. So, it's probably 50-50. I'd either take your money now or wait and see if it gaps down on Monday morning, and then probably take the cash if it does gap down. But I think you kind of, since you waited to go through 1 o'clock on Friday, you kind of have a free roll now till Monday. It could go up a little on Monday morning, but my guess is it opens probably about where it closed or closes today. So I would say you got probably a free day on Monday. So I would kind of look at it a little bit more then. Okay?
Yeah, I'll wait till Monday. Thank you very much, Dave.
You bet. Yeah, I mean,
have a good day.
Yeah, anybody that's listened to the show for a while will know that we discuss when cash comes out of options. And if it's on a 3-day weekend or a 2-day weekend, normally by noon, 1 o'clock, depends on what's happening in the market, the option premiums just get taken out for the weekend because you're really not going to be able to trade those 2 days. So they kind of just say, we'll take that premium out now. So it's not like normally, unless the stock moves a great deal on Monday morning, that you're going to see that premium come out. So if you hold through 12 or 1 and you see the premium come out, unless you're expecting a big move on that Monday, you kind of have a free roll. You almost wish that whether it's a put or a call, that you just hang on and maybe you get a little bit more. As Jesse Livermore said in his book, Reminiscence of a Stock Operator, he said, you kind of have to wish that and hope that your profits become bigger profits, and you have to worry that your losses are going to become bigger losses. If you're on the positive side, like that caller, Mr. Reddy, had, then you kind of have to wish and hope and even hold for more profits. If you're in a losing position, you have to fear that they're going to get bigger, and that's why in a losing position, you are much weaker. But thanks for the call, and look forward to many more. A request in the den to look at Mr. J&J. This one has pretty much broken under. I mean, these are, like I said, there are more double repo patterns out here than you can shake a stick at. This one goes back to the 16th of February. This would be perfect, especially going into fund buying. I could see many people wanting to buy this, get it back above the 9-day moving average, get the next close underneath it. And I think you have a move back to 100. These two previous lows on February 11th and the 5th, I think you could get into both of them. If you're just looking at the safe play, and according to Joe DiNapoli's double repo pattern, you would say it goes at least back to where it started, and that would be at 102. We'll be back after this brief commercial interruption.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Got a lot of stuff to look at. Oh, we just did that. We'll take a look at Amazon quickly. I know everybody's kind of talked this one to death already, so I don't suspect that there's a great deal other than the fact that we are back into this gap that it came down on. That gap was on the 4th of January with the rest of the stocks. See what we got there. Popped up, what was that? 9 million shares were in with 8.5. We just kind of come back up to these highs, and that is it for Amazon. And, you really, I don't know, you've got a lot of juice in this. The question I think now is if we get a couple of quarters in Amazon, this is kind of long term on the thing, what is that PE going to look like in 6 months or a year? We'd gone from something like a 220 PE on Amazon because, of course, they never had any profits, really, to speak of, to having $1 billion worth of profits, which is nice. Everybody always knew that they could, put together 2 years of profits if they wanted to. All they had to do is quit spending money. But, of course, all they do is continue to spend money to grow and absorb everything in the world that touches them. They are much like the Borg. This is up there, but, I just get the sense. I would have liked to seen a great deal more volume. You had 14 million shares on January 28th spike. I would have liked to seen something like that. 8.5 million shares, that's good, but not anywhere close to what I've liked to have seen. That fourth gap still in there, probably fills it. Maybe it gets to 696 by the end of fund buying. My guess is if there's one stock that everybody that has to be long will pile into next week, it's most likely that, but there may be only 2 or 3% to the upside on it. I like the stock. I dislike the market. And I think maybe just the selling of the NASDAQ will take it with it. What else do we have out here? Anika Therapeutics. I don't see a great deal in this one today. BKCC dropped the chalupa. This is BlackRock Investment Capital Corporation. Just kind of a big move out here. Certainly significant volume. Let's go to some other ones we know a little bit better, like Cliff Naturals. Breaking out of its base the other day. Still has a lot of juice coming out here, but just going sideways. I still think that we're at the point where we're getting ready for some kind of pullback. I've thought so for a while and have been wrong. Thank God I didn't short any of these stocks, including the gold stocks. They continue to rip higher. but not a lot of movement. In fact, looking at several of these, wanted to see what's going on. Haynes Brands, Netgear, just wanted to see after yesterday what these stocks did. Just a lot of them. The pattern is that they're giving back a lot, of course, of what they had yesterday, or doing little reversals. Today, of course, the one that did the worst was Synaptics. And let's see, let's get back to that real quick. Down, volume's pretty good. This looks like it's headed back down to the $57 range. In fact, you had to close below exactly what you were looking for in a double repo pattern. Man, I should have seen this one. Maybe it was down too much. Maybe I wouldn't have been able to pull the trigger, but certainly this is much more about what you're looking for when we talked about this other pattern, and that is, 10 to 15 days above something like a 3-day, close kind of below it for a little while, close back up it for a while, and then the close back below, and normally right after that, you get it. With earnings, I probably wouldn't have shorted it, but that's kind of the pattern you're looking for as a generality of what's going on out there. I had a lot of these patterns out there. I wanted to get a chance to go through them myself, and I think we've got enough time to look at these stocks that are hanging at highs. BAVI, ABBV, man, this is hanging on like a loose tooth today. Volume is picking up. Couldn't hold the highs from yesterday. ADT, nice little pop here. Let's get to a little shorter time span, though, so we can see some of these. What are we doing here? Where's my mouse? Mr. Meese. Let's look at one else here. Okay. Aerie Pharmaceuticals. This one's now going to close under today. That's AERI. AHS is closed under it. This is where you get the little dip, maybe a day or two or three. Then it closes back above the 9-day or the 3-day moving average. And then the next close underneath that is when the market generally falls apart. So you don't want to anticipate these too much, but AMF Healthcare Services, one you want to put on your radar and look at these over the next couple of days. I guess you're going to have a little bit of a bounce for fund buying. I got fundraising on the mind. Amarin Corporation, right on the cusp. What else do we have out here? I'll just source. Certainly have this in spades in the gold stocks, but none of these things are actually breaking, that I looked at this morning, are really breaking under their 9-day moving average. My guess is you're going to get a dip underneath that one more pop, and that will signal the top, and you don't have that in any of these. Baxter International still above it. What else do we have? Beckons and Dickinson still above the 9-day out here. What else do we have? Wanted to look at, we got BioScript right on the edge. Let's take a look at Bristol Myers Squibb. A lot of these still up there on this day, which makes me think that there still is a little bit of a bounce in this market to come into fund buying. You get a little close underneath it, close above it, close below it, and that is when the market will roll, and that's kind of takes us into May. Cure Mining, CDE, still way above the 9-day. What else do we have out here? Darden Restaurants. Take a quick look at this guy. Our Darling Ingredients, excuse me. Still above it. So we still have enough of these stocks that are above it that haven't confirmed. Those are the ones that I'm thinking may push this market up just for a little while. Easy Corp used to be a big one in the den out here. This thing has gone from about $3 to $5. Certainly on a percentage basis, very nice. Again, just looking for kind of a bad day to get these under. Fluidim Corporation, FLDM, is going to close underneath this today. What else do we have as we go through this? KGC. Now, these things are way above it, so it's going to take a little bit of time before these things roll over. I guess something could happen in the dollar, but I don't think so. I think Monday when we come in for this thing, you need the kind of the 9-day average to catch up with these. So you could probably see these hold up at least through Wednesday of next week still. I don't see anything that says that these things are ready to roll over just yet. Doesn't mean they're going higher. It just means that I don't see anything that says roll over quite yet. We'll be back after this break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And a good comment in the den. Merck has that same kind of pattern. We're well underneath the 9-day moving average after being above it and basically back to the 21st of March. So, you've got a month and a half just about in trading for all these that have done nothing but kind of go a little higher each day or stumble a little higher each day. Now that you've got the move down, normally this is a fairly good pattern out here. You see that no one really believes it to begin with. You get a little down move, volume's okay, but you don't get that heavy volume. You get everybody wanting to buy it one more time. Still does not go to its high. It will go probably, back up to 56 or something, gets back over that 9-day moving average, and then you see very light volume, and then it closes back underneath that 9-day, and that's generally where the real destruction comes in a great deal of stocks out here. We're at 2055 on the S&P cash, just a couple of points higher than the low of day. Volume is brisk, especially for a Friday. with 3.11 billion shares. Volume kind of tepid, went a little tepid after the start of the show. So we are, I think, probably getting a lot of people leaving a little early out here. Still think that we're probably going to close at the lows, just being a couple points above it. It's going to be very hard to get. A lot of people, like I said, throw themselves on the grenade going on to a weekend. But a lot of charts out here looking very interesting. Very, very interesting. Let's try to find some of these other ones out here. SCTY, which is Solar City. This thing, of course, is, I don't know if you could get shares short of this or not. It has closed underneath its 9-day after being above it since the 1st of April. And, you know, you get these nice trends. This, of course, was really hammered. It is one of the best shorts in the markets. Target, he was targeting this thing, I think, in the 50s and 60s before it kind of blew apart, mostly after he said that it was kind of a big problem with basically it was a financing company that had something to do with solar panels. And if I remember right, the CEO was the brother-in-law of Elon Musk. So it's also got kind of the smell of a little bit of nepotism hanging around out there. Down, volume kind of picked up from yesterday out here. Again, I suspect we got fun buying, that you can see these things, maybe not go a great deal higher, but kind of sneak back above these lines, close back below them, probably mid next week, and you're going to see a great deal more stocks participate in the downside. That's what I'm looking at right now. What else do we have out here? Ulta, ULTA. This has been one of these rocket rides to the top. This one is getting very close. I continue to think maybe this is one of the stocks that gets one more gap higher. When's the next earnings date out here for this? May 26th. So this one may buck the trend just because of that. I've driven by a bunch of these, and it's at least the ones down here in the kind of like in strip malls and stuff. And I don't have any reason to go in, but I always see a lot of traffic coming in and out. I wish I would have noticed that traffic a long time ago when this thing really set up to run. It's done nothing but go higher and higher for a couple of years now. Yeah, I mean, this thing's had a big pullback, of course, on the August 24th day of last year that may have shook you out of it, but continues to be a very strong stock and in the right business. That's about it. We're going to have a good weekend, of course, sitting on some ungodly profits in the daily newsletter. In the meantime, hang on for Tom O'Brien. Sell when you can, not when you have to. And meet me here, 2 o'clock Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.